For more on the market sell-off, let's bring in Mike LaBella, Senior Portfolio Manager with Franklin Templeton Investment Solutions, and Valerie Grant, Senior VP and Portfolio Manager with Alliance Bernstein. Valerie, let me start with you. When the market sells off the way it's been selling off, now the NASDAQ down 10% from its all-time high, negative for the year, is it a buying opportunity in your view? And if so, what would you be buying?
I think certainly it can present some buying opportunities. Really, the key themes that I'm focused on are the reopening opportunities, rising rates, and climate change. And as I think about reopening, there are lots of stocks in the consumer discretionary sector that did not benefit from the work from home phenomenon. All of the focus was on electronic commerce and streaming and those types of investment opportunities. But as we saw this morning with Burlington, right, which reported very strong numbers, that, there is opportunity to be had in some of these companies that had been quite beaten up and had underperformed historically. So I think consumer discretionary stocks, if you look at them selectively, is an opportunity. Also, if you look at industrials, I think the previous guest mentioned that as well. Industrials, it's a sector that had underperformed, but I think there are opportunities there in this current environment as well. And many of those, ironically, are very well positioned as it relates to climate change. Several of the companies that I have in our portfolio have really taken tangible steps to adapt their businesses to climate change. And one example there would be waste management, because they actually capture emissions and then reuse those emissions to power their fleet of trucks. And then finally, you can't forget about financials in a rising rate environment. It tends to be favorable for financials. And there we own a number of banks, but one of which I think is particularly interesting is Citi. They benefit from rising rates, as do their peers, but they also have a fresh new management team. And so I'm very excited and interested in hearing what Jane Fraser is going to do now that she's at the helm of that organization, and probably, I think, making some strategic moves as she completes her strategic review.
Yeah, an interesting post. A lot of people be watching her as she becomes the first female to lead a major money center bank. Mike, let's pick up on what Valerie said. I don't think you're going to take much issue with what she said. You say value has more room to run. You like financials. You like industrials, as does Valerie. Tell me, though, why. Tell me why, Daddy, industrials and financials and value does better when interest rates rise than growth. Why is that?
Sure. What we're looking at right now is the tug of war between rising growth expectations, which gets market and equities really excited, and then rising rates, which can be very scary for the market and think that it might affect the growth rally. Now, when we think about the sensitivity of underlying sectors, rising rates are often associated with rising growth. So if rates are rising because of the economy's improving, the economies are opening up or we're moving out of the lockdown state, that's going to be broadly supportive. And to the businesses that's going to be supportive to are those businesses that did really poorly last year. Think about sectors in financials, industrials, pretty much anything outside of technology and those large tech names. From an earnings standpoint, got completely destroyed last year. That's going to recover. So the major concern here now is, will rising rates be orderly or will it be disruptive? And what we're likely to see is that this back and forth over the market is likely to continue, which means that volatility is going to be here for some time as the market tries to figure out rates. But Powell coming out here again today, basically saying we're a long way from reaching the Fed's unemployment goals. They're essentially telling us that their inflation expectations, while they're looking to see inflation rise, it's going to be transitory, and they're telling us they're going to look past it, means that there's probably going to be a cap to how far rates are going to go. So it's not going to stall the overall economy, but what's likely is it is going to stall the growth trade, which really has become much more sensitive to rates. So this is an opportunity for utilizing this volatility to shift into these pro-cyclical and value-oriented sectors that really struggled last year, but are going to be very supportive as the economy reopens.
Shepard Smith here. Thanks for watching CNBC on YouTube.